Welcome to WAQAR'S FINAIRES, where we make finance simple and practical for your everyday life. Today, we're diving into a topic that sits at the heart of the American dream, buying a home. But before you jump in, let's break down what homeownership really means. And more importantly, is it the right move for you? The true cost of owning a home. Owning a home is a dream for many, but let's be real, it's expensive. Back in 2005, the median home price in the US was creeping toward $200,000. For most people, that's not spare change sitting in a savings account. And yet, as of that year, about 70% of Americans owned a home. How? The answer? Mortgages. Wait, what exactly is a mortgage? Contrary to what you might think, a mortgage isn't just a loan. It's actually a lien, a legal claim the lender has on your home until you've paid off the debt. Translation? If you stop making payments, the lender has the right to take ownership of your property. So before you take the plunge, ask yourself, does buying a home actually make sense for my financial situation and lifestyle? Because here's the thing, homeownership isn't just about paying a mortgage. Imagine this, you buy a house, settle in, and a few months later, you get a job offer in another city. Selling that house so soon? That could cost you thousands in fees, commissions, and closing costs. Ouch! Before making this big decision, think long-term. Your financial stability, your future plans, and all the hidden costs of homeownership, like maintenance, property taxes, home insurance. Now that we've examined homeownership, let's jump into the timeless discussion. Renting versus buying. Which option is superior? It varies. Let's break it down. The advantages of owning a home. Building equity. Every mortgage payment means you own a bigger share of your home. Think of it as a built-in savings plan. You're investing in an asset that hopefully appreciates in value over time. Rising home values. Over time, home prices generally increase, and sometimes they skyrocket. Your home can be a powerful wealth-building tool. Tax benefits. The government assists homeowners by allowing you to deduct mortgage interest from your taxable income. Example, if you pay $10,000 in mortgage interest annually, that amount can be deducted, possibly saving you thousands on taxes. Sounds pretty good, right? But hold on, homeownership isn't all smooth sailing. The drawbacks of buying a home. Maintenance costs. Leaky pipes? Broken furnace? You're responsible for the repairs. Reduced flexibility. Need to relocate for work? You can't just grab your bags. You'll need to sell your house first, which can take time and cost a lot. Market risk. Home prices don't always rise. Example, you buy a house for $300,000, but the market crashes. If you sell later for $250,000, you could lose $50,000. Why renting may be the better option? Let's switch perspectives. Renting equals freedom. No repair costs. No worries about property values dropping. Need to move? Pack up and go. Example, if your job moves you, renting makes relocating a breeze. No mortgage to worry about. No house to sell. Which is more affordable, renting or buying? Let's look at the numbers. In our example, purchasing a home saves you around $300 per year compared to renting. But here's the catch. Rent increases with inflation. If you pay $750 today, it could rise to $1,000 in 10 years. A fixed-rate mortgage stays the same. $900 today will still be $900 10 years from now. Fast forward to 2023, and things have shifted. The median home price? Over $400,000. The average rent? Close to $2,000 a month. In many places, the difference between renting and buying has narrowed, making the choice even more complicated. So, what's the best option for you? Ask yourself, do I want to build equity and invest in property? Or do I prefer flexibility and the freedom to move whenever? There's no one-size-fits-all answer. It depends on your financial situation and lifestyle. Want to crunch the numbers? Use the interactive worksheet at www.wsj.com/booktools to compare costs and make an informed decision. Whatever you choose, make sure it's the right choice for you. Here's an important question to consider now. How much can you truly afford? Some spending decisions are pretty straightforward, like picking between a $12 filet or a $20 porterhouse, or weighing whether that $70,000 Mercedes is a good fit when you're making $20,000 a year. Simple choices, right? But when you're buying a home, it's a whole different story. Now, we're talking about hundreds of thousands of dollars stretched over 30 years. Add fluctuating interest rates, and suddenly, things get unclear. But don't worry, we'll break it all down so you can clearly understand what's realistic for your situation. So, how do you know what you can afford? Well, here's the key. The home you think you can afford might not be the home the lender thinks you can afford. And why is this important? Because at the end of the day, it's the lender who decides how much they'll let you borrow. Lenders don't just guess, they use specific formulas to figure out what they're willing to loan you. These formulas are based on two main factors. One, your income. Two, your existing debt. Let's say you and a coworker both make $50,000 per year. Seems pretty equal, right? Not quite. If you're carrying a hefty load of credit card debt, car loans, or student loans, your coworker is actually in a better position to qualify for a larger mortgage. Why? Because your income doesn't just go toward the mortgage, it's also covering all your other debts. The two key formulas lenders use. Okay, let's dive into the math. Don't worry, I'll keep it simple. Lenders rely on two main formulas to figure out what you can afford. The front-end ratio. This tells them how much of your income can go solely toward the mortgage. Lenders typically cap this at 28 to 31% of your gross monthly income. For example, if you make $50,000 annually, around $4,167 per month, your mortgage payment should not exceed $1,167. The back-end ratio. This is broader. It includes all your debt payments, mortgage, credit cards, auto loans, student loans, child support, everything. Most lenders like this number to stay under 36 to 50% of your income, with many aiming for around 40%. Using the $50,000 example, your total monthly debt payments, including your mortgage, shouldn't surpass $1,500. But here's the catch. Even though lenders use these formulas, they'll always choose the lower of the two when deciding your loan amount. So it's wise to know both numbers for yourself, because while the bank may approve a certain amount, only you can decide what's comfortable for your budget. And remember, mortgage payments aren't the only costs. Your monthly payment doesn't just cover the loan, it also includes property taxes, homeowner's insurance. These are bundled together in what's called PITI, principal, interest, taxes, and insurance. Most lenders wrap these costs into your mortgage payment and hold them in an escrow account. That way, when the tax or insurance bill comes due, the lender handles the payment for you. However, if you'd prefer to manage these expenses yourself, make sure to budget carefully to avoid any surprises. Fast forward to today, things have changed. Let's talk about 2023. With rising home prices and higher interest rates, affordability has become an even bigger challenge. Currently, the average 30-year fixed mortgage rate is around 7%. The median home price is over $400,000. That means you might not be able to borrow as much as you could have a few years ago. So, how much house can you afford? It all comes down to staying within your limits, not just what the lender says, but what feels right for your lifestyle. Want to do the math yourself? Use the interactive worksheet at www.wsj.com/booktools to calculate your ratios and determine what fits your budget. And remember, buying a home is a significant decision, but with the right knowledge, you'll be ready to make the best choice for you. This video was brought to you by Books and Tax Professionals, a team of expert accountants dedicated to helping you achieve your financial goals. Whether you need accounting, bookkeeping, or virtual CFO services, we've got you covered. Visit our website or contact us today for a consultation. If you found this video helpful, don't forget to like this video, share it with others, subscribe for more financial tips and advice. Remember, every small step you take toward financial literacy brings you closer to your dreams. Thanks for watching, and we'll see you in the next video.